Hello traders, Gary Wagner here just after 12:30 in Honolulu, 6:30 in New York. It is Thursday, 7th day of May, 2020, and this is the Daily Report for Gold and Silver. A tremendous upside move takes gold pricing above the resistance line that we created from the pennant formation or compression triangle. That did trigger a buy signal. We sent that out this morning well before we did this show. We currently have gold trading at around 1725, 1726. But on today's video report, in our technical study section, I will detail what sparked the trigger, why we put our stop where we did, and on tomorrow's review, we will talk about what our exit strategy is. But first, to the price board. Gold certainly made an extremely strong move to the upside, currently trading at $1,727.20, a net gain of $38.70 on the day. We did send out a special trade alert after it had broken above the upper band of the compression triangle we have been discussing over the last couple of days. When we look at spot gold, up about $30.10, 1715.60. At one point, the spread had really contracted, but now has widened as this rally began and continued to gather steam. Platinum gained about 2% on the day, taking it to 781.10. Palladium gained almost 5%, 4.65 at 1840.70. And silver gained about 4% in trading today, 1563. That's after factoring in today's gain of 61.5 cents. And lastly, all of the precious metals were aided by dollar weakness today, which contributed about 0.3% to the price of gold because it went down, currently fixed at 99.84. Let's take a look at our technical studies. Traders, as you recall, beginning on Tuesday, and we talked about it a little bit last week, but we really highlighted on Tuesday the fact that what I was seeing was a basic pennant formation, or what is commonly referred to as a pennant formation. We saw a succession of lower highs. We also saw a succession of higher lows, which simply means that although we've been trading sideways, we are making these series of lower highs and higher lows, and that truly told me we were quickly approaching the apex of this triangle and we could see a breakout at any moment. If you recall from yesterday's show, we had a down day, and the primary question that I tried to answer was whether or not that move down was any kind of technical confirmation that we did in fact see gold suffer major chart damage on a technical basis. The chart that we're looking at is from yesterday's show. We talked about the fact that although it did move down and move down substantially, it pretty much closed right at this line. This, of course, is the following day that was completed today, in which we saw the market move up tremendously. Once it broke above the pennant formation itself, that is when we issued a buy signal. Traders taking that call got in at roughly 1724. Traders, we are looking at a daily chart from today's activity. We can clearly see a defined and strong breakout to the upside. This little red line represents current market activity. Currently, we have gold trading at 1726.30. We also put in a move for conservative as well as aggressive traders. And for the conservative traders, if we do see a dip, my recommendation is to go long the June contract. However, I am going to add something to that, and that is if the market breaks above say 1730, this is 33 right here, so breaks above these highs, conservative traders should add on the breakout to the upside. Now, we do have our stop rather loose, and I'm looking to move it up quickly. As soon as we can, we'll see what happens on tomorrow morning's jobs report. But my recommendation for right now is to maintain your current long position at 1724, maintain your current stop at 1680. I am going to look to move it up either later on today or early tomorrow. This has been Gary Wagner Wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.